Hello, Scott. Hello, Steve and Andy.
Hey,
Happy Monday.
hey. Hello, Jamie. Hello, everybody. Happy Monday.
I feel like I've come back from a very, very long vacation, but I haven't really went anywhere. But, having said that, I guess I kind of fall into the same trap as everybody else with these expectations, right? So I don't want to get the cart in front of the horse here, Steve. So why don't I go ahead and do the legal stuff here, and then we'll get down to
Sure.
all right, everybody. For those of you who attend regularly, you already know the drill, but for those of you who are out there that might be here for the first time, of course we do this every time. Just want to make sure that you're aware of the fact that the information that we're sharing with you here today is for educational purposes only. Please don't take this as a solicitation to buy or sell securities or anything else for that matter. If you do need investment advice, plenty of licensed individuals out there that can help you out with that. So if you need that, please seek it out and realize that we are purveyors of information. So, educational purposes only for what we're going to show you here today. Alrighty, so before we get rolling here, just want to make sure everybody knows about the community that we've created around our award-winning technology. Of course, today is Monday. We do office hours with Steve and myself. Tuesdays, it's Steve running the show with the trade of the week, and Andy is typically riding shotgun with Steve. On Wednesdays, we try to mix it up a little bit, give you a different viewpoint. That's when Brad and Dan do the Q&A session on Wednesdays, and then we round everything out with Thursday, Andy's trading studio, and I ride shotgun with Andy. And because we're nice, we give you Friday off. Also, too, the trading room. It's been peaking out at over 600 people on any given day, slowly increasing for too long. By the end of the year, we'll probably have 1,000 people in there. But if you haven't been taking advantage of the trading room, you need to check it out because Barry's in there every day. Today's the exception. We're getting ready to have the Trade Ideas annual meeting. But for the most part, on any day, there's over 600 people in there, and they're in there for a reason, and that's because there's high-quality information in there. So just wanted to make everybody aware of the community that we're building around the technology. It's not just about the technology. So moving right along.
Can I just add, though, that those dates and times that Jamie just showed today is the only valid one this week. As you heard him say, we are having our Trade Ideas annual meeting. We have people flying in from across the country, and we're going to be offline for a couple of days. So there is going to be no more webinars this week. This is actually the only webinar this week that we're going to have at 5 p.m. Eastern. And again, it's to accommodate everybody in the same room so we can get on the same page for our annual meeting of Trade Ideas. But I'm going to touch a little bit about some of the trade of the weeks that have been going on the last couple of weeks going forward. So if people are curious about that, I will touch on that during this webinar.
Yes, indeed. And of course, Steve, I guess it's that time, market recap. Before we move in here, Steve and I were just kind of looking at all the charts before the webinar began here and just kind of chuckling to ourselves about, well, here we are again. And I'm not going to steal your thunder, Steve. Let me pass the baton over to you, and you can take it away if you're ready.
Yep, I certainly can do that. And that does go the same for Barry's live trading room. Barry's flying down from Canada tomorrow as well, so he's going to be closing up the room. So this will be kind of a short week on the webinar and trading room. Let me grab my screen here. Okay. All right. You should have a giant daily chart of the SPY.
Yes, sir. You have the helm.
Okay. Let me back up and make sure we're all set here. All right. Well, once again, here we are going sideways. I had kind of thought that I had heard a good axiom out there. Somebody had said, buy the election, sell the inauguration. Sometimes those can be some interesting type of calls. But in this case, necessarily not today. We are still in this crazy sideways range. And if I put up the diamonds, DIA, excuse me, we are in a really crazy sideways range. IWM slowly starting to break down through that range. That's interesting. We'll have to come back to that. And then the Qs, actually the Qs are kind of taking leadership role again. But when it comes to the Dow and the SPY, we are still in just a mother of a sideways range here. And not only that, look at all these wicks. You know, this was a complete doji day right here, basically opened where we closed. Same thing here, doji day, opened, traded down, bought it right back. Here's another doji day. Here's a doji day on Friday and kind of a very narrow range day here and last Tuesday. So this market is not really interested in showing its hand and picking a direction just yet. But all we have to work on still are our support and resistance lines. So as you can see, this line in the SPY is still relatively intact. It did breach it down here, but grabbed it back and has since been closing above it. The diamonds, same thing. We had an attempt last Thursday to break through, but again, we don't look at the intradays. We look at the closing candles, and it's okay in my book for a wick to try and pop through, but as long as the price closes above our level of interest, we're okay. So this seems to still be the narrow, tight band range that we're in for the diamonds, the Dow. The small caps, as I said, they're starting to break down. We closed above them Thursday and again today. So this was a level that we've been watching in the small caps. So the IWM seemed to be kind of the first sector slowly starting to give back some of those gains. And then on the flip side, the technology-laden sector of the Qs seems to be kind of taking the lead at the moment. And then very, very much off of its support levels. Matter of fact, we could probably come in and draw some support right here just based off of these prior wicks and that prior close right there. We'll keep an eye on that level. But, you know, this market is not showing itself. I'm going to look for the S&P, the SPY, and the DIA to really try and give us some direction, and that's going to either be a breakdown and a close below this level right here, which is 19706 in the diamonds. Of course, this level here is the level everybody's been waiting for, which of course hasn't come. Still may come, we don't know, but that's Dow 20,000 up there. So we'll be watching the Dow closely and the SPY closely. If these SPYs close back again below this level here, it could be at the beginning of some give back and weakness. But today is just the first day after the new election. I thought maybe we'd see a little bit more directional ideas, but nonetheless just kind of a spinning top here today. Nothing really to show for it. Now, do I expect a market pullback? I don't know. I don't know, money trader. I mean, that's your guess is as good as mine. We're trying to look at, you know, four different indices here. When you look at the Qs, you know, you could say we definitely could be due for a pullback, and that's why I kind of drew that line. Wouldn't be surprised to maybe see a pullback to that level in the Qs, but right now they are the leadership of our market. And the IWM, the small caps, the Russell 2000 are bleeding down through their technical support. So we can always try and figure out why, but I'd rather just focus on the footprints in the sand that are violating, you know, certain levels. And so that's basically it for the rundown of market recap. In other words, nothing's really changed, even though we did have the election and the inauguration. It could take a couple days this week for some more catalysts to come out and some more ideas, but for now, we're still kind of in this choppy range that we've been in. Now, I'll switch gears a little bit. As I mentioned, exactly, we can only react to what we see. You're exactly right. I try not to get caught up in what CEOs say. They're notorious at lying. I try not to get caught up in what analysts say. They're notorious for having ulterior motives that we don't know about. But what we can follow is the footprints in the sand, and that tells us what the herd is thinking. And the IWM was a leadership role, basically breaking out, was the first index to break out, but now it's starting to get a little bit soft. So, you know, we're still kind of in no man's land using the SPY and the DIA, so we'll see where we go from here. Again, if these diamonds close below this 197.03 and we get a close, then we definitely could be due for a pullback, maybe down to this level. So switching gears real quickly, as I said in the opening, it's been a crazy start to the year. We've had some holidays, we've had some guest speakers, and we haven't had the trade of the week. And again, tomorrow, because of our annual meeting, we're not going to have a trade of the week webinar. But I do want to just check in with you guys and go back in time a little bit. The very first trade of the week was SBGL for the year 2017. If you follow me on Twitter, you know I've been kind of pounding the table a lot on GDX. I feel like that's been the sector that was forgotten in the last couple quarters, and I feel like that's the interesting sector moving forward. And if I just type it in here, GDX, if I just say it, it has been moving up nicely, and today was leading the charge and definitely closed on highs. So SPGL is a gold stock. This red candle right here was the last day of the year, and we called this particular stock on the first trading day, which was right here, down around 730 or so, and we're up to 880. So this thing's up about 20%. And in the near term, if you guys are still long this thing, what I'd be looking at is to see, what's going to happen when we get to this level. This really is going to be our first level of defense where the sellers might come in. But there's no law that says if you're working with a profit and you get to these upside levels that you might want to sell a third or kick a chunk out of the bag and lock some profits in. But beyond that, I really feel like we can get back up into these levels right here over the next coming weeks. So that was the first trade of the week, SBGL. It's up 20% from the entry and looking good. I believe the second trade of the week that came out was looking for a short squeeze in this particular stock called True. The actual stock gapped up the day that we called it and then traded back and then triggered that green line right there, which was our trigger price. So essentially the stock is live around 314, 315 this trade, and it's just been kind of going back and forth. This thing has a incredible short squeeze possibility. And there is, you can see coming back here as it was flagging and flagging and flagging before this day, this is basically where the trade was called. But the idea on this one is kind of what we talk a lot about, the trend change lubricants, building a base, building higher lows, and it's slammed right into a level of supply right here. And if we can get it to get through that level of supply, we've got, what do we got? 31% short the float on a 70 million short float. So 70 million is a decent amount of shares, but still 31% of those are not going to want to see the price get back above this level. So the trade is still intact. However, we've got to, of course, talk about risk management. This red line right here below these two little tweezer bars is basically the risk management and the out. So if this trade True trades below that red line, that's our stop. If we can get above this green line and hold and close, well, there should be some nice upside with the short float being as high as it is. The following week, FCX, again, kind of going back to some metals and mining. Here's what we liked. Here's what I loved. Forget like. Here's what I loved about FCX. Basically, we had this gap up on some nice news. I believe it was, I'm not even going to concern myself with what that was. The buyers were happy. They gapped it up on good volume. There's two good volume bars down here. But what happens after we get in one direction? Well, the market has a funny way of trying to get a little bit crazy and a little bit volatile. So we actually threw in a washout bounce candle. And for those of you that follow me, you know that I like the washout bounce. Here's our washout bounce candle for today, ZBRA, but I digress. Back on the day of, this was the washout bounce candle. That was a hammer. Now, what do I like about it? Well, I love the sector. I think copper and some of these mining companies are going to continue, I think, to show the strength they've been showing in basing. But what I really loved was everybody that bought here, a lot of them probably got stopped out with this giant washout bounce. Once again, the washout bounce takes everybody out in the first 15 minutes and buys it back in the first 15 minutes. Classic example of HFT running stops, basically filled this gap area, which I love, and then coming off of these types of hammer candles, usually we can try and hold our own and start to build a base and move higher, and that's exactly what FCX is doing. So FCX is looking good. Obviously, we're going to run into some levels up here, but if we can clear those levels, hopefully in the next day or two, this thing could be looking pretty decent. And then the one that came out yesterday, the latest trade of the week, is GoPro, but GoPro was conditional. GoPro was conditional on taking out this level right here. The tops of these two wicks is 960 once, 960 twice. You look over here, 960 was support, support, support. So we've identified a pivot line. All we need to do is look at the short float, and we've got 33% short the float of GoPro. So they can say whatever they want. but I'm just going to focus on what the footprints in the sand say. The conditional trade is not open yet. It's going to have to take out 961, but anytime this week, if GoPro takes out 961, we could have a really nice short squeeze back up into the range. This thing has been beaten up pretty good, and this is the floor basically down here at 850. The stop is going to be at 850. If any of you want to go back and look at this on a daily chart, you will see that is a very solid floor that's been tested a couple times. So we're in between this range here for the most part, and moving forward, if we can get a move through that 961 level, then that trigger will make the trade of the week active for GoPro. FCX earnings, somebody's asking me about. Looks like it's got earnings coming up pretty soon. A couple days, so that's your call if you want to exit beforehand, or if you want to take it into earnings, that's your call. You know, we're back in the middle of earnings season here, but I feel like we've got a pretty good base being built under the FCX chart here. We still have 3 days to go before that one comes out. All right, a previous comment on SPWR was a trade of the week from 2016. I'm just trying to take a look here at the bigger picture. You know, SPWR, it really can't give back much more than this 650 level. If I recall, the SPWR trade that we gave out last 2016 was stopped out, so it's got a whole new look to it here. But essentially, I wouldn't want to see it break this level here of 650 for the most part. All right, that's enough of that. Let me get back to the topic at hand, which is Jamie's desktop. So here it comes, Jamie. Here comes your desktop back at you.
All right. So let me know when you can see again, and we will progress.
I can see it.
And once again, some very keen technical insight coming from Mr. Gomez there. And yeah, that FCX trade, I'm in it myself. So we could say that not only am I the president of the Hair Club for Men, but I'm also a client. So earnings coming up with the FCX. We'll see what happens. But really good stuff, Steve.
Cool.
All right, so let's get on to the Holly recap, which, as most of you know that attend the webinars, usually Holly is a bit busier than she has been as of late. But when the information and the statistical advantage is not there, we don't want to see Holly very active. So kind of feel like a replay of last Thursday, I believe. What we have, I can't remember the exact number, it was 3 or 4 trades only. But once again, this is indicative of the market conditions. So before we move on to Holly stuff, just wanted to kind of point out once again, everybody was talking about volume was low, so forth and so on. The volume that we did have was mainly to the downside if you're looking at the most actives. But we can see here, you know, I've taken the liberty of installing some volume columns to my little indice top list window here. You know, here we can see on the 3-month average, the Qs usually do almost 24 million shares. We didn't even crack 17 million today. Considerably below the 3-month average on the SPYs too, 87 million versus about 67 million. It's slightly lower, not quite to the tune of 25% on the Dow. So yes, it was a low volume day today. Decent range in the SPY overall. What do we have at top up here of 226.81, down here? You know, a nice range, but once this little move is over, just a lot of, you know, chop and sideways action, trying to make a little bit of that back. So Holly today, we had a grand tally of only 7 strategies that made the cut after all the analysis was done for the prior close of Friday. And you can see those strategies here: 7 strategies, 2 short, 5 long, and of course, only 2 strategies today fired any trades, and the majority of those came from Wake Up Call, which kicked out 5, and this guy kicked out 1. So, interestingly enough, on a day like today, was a risk-off day. If we were holding these positions to the close, would have wound up right around down 4 cents, give or take a few pennies. So, uh, even with that in mind, if you're just piling into everybody or every trade that Holly issued today and holding to the close down 4 cents, no big event one way or the other. With Holly obeying all of her rule set, we're looking at 29 cents on a total of 6 trades. Now, the interesting thing to point out here is that's what we ended up at, but there was a brief period in time here where, we could have almost doubled that, approaching the 59.60 cent level here. So let's just take a look at what was kicked out today. So right off the bat here, the GOGL, we can see risk off and risk on only have a 2-cent difference today. Now, it just so happened that wake-up call we can see is designed around a 45-minute hold time here, and we can look at the exit reason why Holly closed out the GOGL trade, and it was a time stop. And it just happened to have timed it about perfectly for the intraday levels. So we can see, once again, for those of you who are new, what you're seeing right here when I double-click off of Holly's all trades plotter, we're going to have the blue box and the blue line indicating the area where Holly called the long play here, and then of course corresponding price right here. So you got to love these trades. As soon as you participate, we're in the money. A little bitty consolidation level here after the trade or after the signal was generated. But after that hold time, 45 minutes, Holly was able to lock in 29 cents on that guy, just playing the straight up timed hold. Now, interestingly enough, if we were in this move with Holly today, it all comes down to risk management a lot of the times, because a lot of people still ask the same question, well, how do I know, should I be going risk off or should I be going risk on? And it's better to approach this from an individual trade standpoint, in my opinion. So if we look at the entry time here, 6:40, and then 45 minutes, we're looking at 7:25, and we can see that's where Holly decided to get out, right about here, in this bar. So was there a little bit of a few cookies left on the plate? Sure, but we would have had to have endured this pullback in order to get this extra little piece in between here and here. So, a lot of the times, if we go into Holly's, if we take the trade with Holly immediately, if we're in 200 shares, what do we want to do? Typically, what I like to tell everybody, and I do this myself, is if it's a day like today where we're going down and we're bouncing back up and we're kind of range bound after that initial bounce off the bottom, you just never know sometimes. So the best way to alleviate this condition, and once again, this definitely ties into our 2 demon friends that accompany us every day, fear and greed.
Yep.
We don't want to get out too early because we might be selling ourselves short, but what do we do? So the best way to approach this, whether you're doing 100 lots, 200 lots, 400 lots on your initial positions, when you see Holly closing out a trade, close out half of your position. Give the other position back to either the stop loss or break-even point, depending on your risk tolerance. What we notice a lot of the times is Holly will get out on her reduced risk or profit save. Now, the stock never even comes close to its stop loss most of the time unless it actually gets stopped out. And when that happens, we can also interact with Holly on positions where she's gotten stopped out of. So GOGL, what's most interesting about that one is when we look at the daily and see the levels that it's starting to take out. And we can see I zoomed way out here. So GOGL, talking about maybe holding for a swing trade, if levels get above here, we could have a continuation here. Now, yeah, there we go. So that's a good representation right there. I know these bars are a little small, so I'll try to enlarge this a little bit. But what I've done is I've just drawn some simple lines back to this area back here that could possibly act as a little bit of resistance if we do get some traction going through here. But if we get out of that little trough there, things could get interesting. So just trying to add the layer on there. If you did participate with Holly on this play and you got a nice intraday move, well, we can consult the daily to see if it might be a worthy risk to hold a little bit of that for the longer term and see if we can get some more alpha out of the trade. Now, GSV today, very interesting. It's the classic risk on trade if you know what to look for. So once again, here's the line where Holly called the long play, $2.31, and this bar right here. As soon as we are made aware of it by Holly, whether we just watch or whether we interact with it, pretty much the same system here. You know, if we got the play here, we're immediately in the money, and then we notice we're immediately, not immediately, but we come back down to the signal and go slightly below it. So in the money, out of the money, but once again, let me compress this a little bit because we can't see our stop loss level. You can see him hiding way down here at the $2.11 level. So we get a nice little push through here, but as we all know, sometimes they go immediately, just like the GL call. Other times, they'll come back down through that signal. And, you know, always like to point out that the statistical probability that Holly's generating out of these strategies, it's good for the day, right? So sometimes they go, other times they'll hover around this signal area, and they might pop back and forth through it maybe 2 or 3 times. But from experience standpoint, as long as we're hugging that line, I'm not too worried about it, because if anything, what it does is allow us to size it up. Maybe we come over here, maybe we take a look at what to expect if we do get that traction and we get that nice move, which we can see kind of, you know, popped up here on the wick and then retraced back a little bit. No big surprise there, but a nice intraday move here. If we're long from 231, you know, we're up a nice percentage on a low dollar stock. And then once again, we have to decide, well, would we like to hold it, or are we just an intraday guy or girl? Now, interestingly enough here, once we get that push through up to this level here, it's the same old song and dance. Are we going to get out of some with Holly, or are we going to hold it? And then what else do our human eyes tell us? Well, once again, we've got the nice push up to the highs, and then, you know, talk about a nice identifiable consolidation level. And it's hard to get better than this. Nice and tame. Buyers and sellers have become equal. That's what this is telling us. A lot of different ways to describe what we're seeing here in R7, short-term consolidation, so forth and so on. But what's really nice about this is that we've got the statistically weighted entry down here. We're in the position here. We're going sideways. And then another excellent opportunity to add to this position presents itself right here when we have a range break out of this little area right here. Of course, I'm playing by the rules. I'm using the wick here. Depending on the type of person that you are, you may want to play the bodies. In either case here, you might have got it a little bit earlier here, but whether you're playing the bodies or the wicks right here, another beautiful chance to add to a winning position, which is one of the questions that we get here the most, especially from people who have just started to cut their teeth, you know, in the live trading environment, is when do I add to my winning positions? You know, and this is a classic example of doing that. So, you know, while Holly shows a 7-cent gain here by exercising a little chart reading ability here and potentially adding to that position, then it's possible for a user who's well adjusted to seeing these patterns to have made, you know, not only 22 cents, but on a lot larger lot than what they started off with here once you're able to identify these simple patterns right here. And once again, the beauty about these types of patterns is in their simplicity. So that's pretty much the highlights from Holly. You know, all of these other trades today, the VOC, you know, a little bit thinner of a stock, had the potential to take a little bit out of it. As we can see, Holly once again held the time stop here, made a whole 6 cents. Then the stock retraced and pretty much closed, penny under the entry here. And then right here on these reduced risks, we can see that Holly's judgment was saving us money on just about all of these. 2 versus 5, 5 versus 40, and 6 versus 8. So not a whole lot of activity today from Holly, but on a day like today, it's a good
That's
sign.
exactly what I was going to say. Yeah, just another doji day inside the range, kind of the AI reminding us statistically noisy, not a whole lot of edge to be had. If there was a lot of edge to be had, we would have seen a lot more trades.
Yes, indeed. All right, so that takes care of the Holly activity today. Let me get back to my sheet here because I lost my train of thought. Okay, so what we're going to talk about next, and this kind of circles back around to several weeks ago. I can't quite pinpoint it out of my head right now, but maybe, I was talking to Steve earlier. I think this topic pretty much came up on Thursday when I co-hosted with Andy, but what we had put out back then were a couple of modified turbo brakes, high and low alert windows that were optimized for the S&P 500, and we were taking the top 50 momentum candidates, making custom lists for those, and then delivering to you guys at the end of the webinar the custom list and things of that nature. And we got a lot of good feedback on those big cap movers that are highly liquid, that are actually moving and present good patterns and risk and so forth and so on. Now, the only problem with that is we're constantly having to update the list, and it just became kind of it's a very cumbersome thing to have to update that list all the time and then put the list in the chat window and all that. So I'm thinking to myself, well, how can we simplify this? How can we redesign? It's not the SPY 50 anymore, but what I'm about to show you here I think will resonate. And whether you just trade these things, or whether you just watch this to help you to help realistic expectations materialize, or whether you trade from it, or ideally, once you get used to seeing it, you're going to be doing both because that's what it's designed for here. Here's a quick screenshot. Big cap movers. So you might be asking yourself, well, what does he mean by big cap movers? Well, the S&P, the minimum market cap to be a possible S&P contingent is a market cap of $5.4 billion on the market cap. All right. So what I've done here, let me just push this guy out of the way and get these guys over here. All right, there's that guy and this guy. Okay, so what exactly is going on in these windows here? These are just 2 alert windows. So it doesn't matter if you look at the upside or the downside first. A little bit more downside action today. So before I begin here, this fits perfectly with what I'm trying to drive home in a lot of my training sessions with new users, and that is the market opens. It could be any day as long as the market is open. There are approximately 8,000 tradable securities on any given market day. 8,000 of them. And all we need is one, we'd like more, but all we really need is one good trade to make our day. But we're having to sort through a universe of 8,000 stocks. So, kind of keeping with the theory here, and you've heard this as well from myself, Steve, and Andy, about how volume doesn't lie. So think about it from this perspective. Where the volume is, that's where the party is. So, if you were going out at night with your family, friends, loved ones, hey, where do you want to go tonight? Oh, let's go where there's nobody, and it's very boring. Of course you wouldn't say that.
No, let's go where the Yelp reviews are all over the place.
Yes.
Substitute Yelp reviews for volume.
Whether it's Yelp reviews or, high praise from other people, that's typically where you're going to migrate to because that's what we want to do when we go out. We want to be around people. We want to be where it's lively. So why would you treat your trading day any different? And not to get too hung up on this, but I'll say this and then we'll move on. If you're dealing with a stock with massive volume flowing through it, and there's high volume, and there's no way to prove that it's institutional volume, but deductive reasoning kind of leads us down that path. Well, then that's a place where the things that you think might happen have a lot higher chance from a statistical standpoint of doing what you think they're going to do. So without further ado, let's just kind of look at these, and once again, simplicity in the settings to get the results that we want. So new low is the only alert being used here. And then, just as a lot of you are familiar with using the earnings per share to weed out all ETFs and iShares, that's what we're doing here. It has to make money. If it doesn't make money, it doesn't get reported. ETFs and iShares don't report earnings. Thus, it's a de facto way to weed them out. It's a lot easier than maintaining a list. Okay, now the solution for the market cap, once again, is very simple as well. You can't see all the zeros in here, but the minimum value is 5.4 billion. Of course, we only want to see the stocks that meet this criteria, where we're getting a nice turbo effect on the 1 minute volume of 3 times higher than normal or higher. And so, once again, a very simple configuration. It's the exact opposite for over here, except we're using the new high as the alert. So, keeping in mind that there was a lot of talk today about low volume, I get into a position, I'm in the money, then I'm out of the money, choppy, choppy. So yes, there was a lot of selling today, and there were many, many stocks, and this always happens, many, many stocks going down on low volume, slightly above normal or normal volume. Now, call me crazy, but I'm just not really interested in most of those stocks for that specific reason. So if we just take a look at the history here today, at all of the highly liquid stocks that were coming through this guy today, and then we start taking a look at the chart here, and I've already prepared some of these instead of boring you guys with scrolling through the list manually today. Now, we all know that the SPY had its fun early on, and took about a little over a point header down. But after the bounce, there were a lot of stocks that continued that type of activity, or had a little bit more downside potential than the SPY, and that were nice continuations. So we could also say that, hey, CSC today, can't guarantee it, but there was probably a little bit of institutional selling going on there. And from a very basic, depending on the type of charts and how active you get in the market, if we just start drawing some lines here, we see some very nice range breaks with low risk. And what do I mean by low risk? Well, obviously this is the first range break that's easily identifiable. Happened not quite an hour after the open. And we can see once it punches through here, a good rule of thumb when you're looking at patterns like this is not including the entry bar, just look back 15 minutes, and if you can stomach the highest point of the prior 15 minutes, then that's a very choice entry, we could say, because look at your risk and look at what was delivered by being short a little bit of CSC today. And of course, if you're able to identify the seller early on, then you are presented with additional opportunities to add to that position. So first one here, nice move, a little consolidation before it takes another leg down. And then depending on how aggressive you are, there's one more chance to maybe play a nice little range break there. So 1, 2, 3 opportunities to make entries in CSC. But how would I have known about this stock? The only reason is if I was watching this guy here. So real quick here, I'm just going to quickly cycle through some of these guys. And I was another move that was sustained pretty much all day. We have ions doing the same thing. DuPont, not quite as pretty, but nobody likes to sit these big wiggles. The chart's not near as pretty as some of the other ones, but depending, compared to where it started and where it ended, we always have a little bit of bounce sometimes at the end, towards the close. But just trying to give you an idea of the flavor of these things. BIP, a little bit thinner of a stock, but as we can see, just a nice sell-off all day. So I could keep going through these patterns, but I think you get the point here. Identifying early on, picking good levels here with some simple patterns. What I'll say is this. Most, but not all people out there that are trying to interact with the markets, whether it's intraday, swing trade, setup, they're fixating on the pattern too much. They're so fixated on their pattern that they get so excited when they finally pull up a stock where their pattern's being exhibited and the risk is in place, they completely fail when it comes to seeing what the volume is, right? So they see their favorite pattern. That stock's only doing normal volume for the day, slightly below, slightly less. Doesn't have very good chances of doing what you think it's going to do. Probably 50% or less, if I just had to guess. Okay? So, it makes more sense to only have ticker windows, alerts, top lists. And I'm not saying that this is the only way to do it, but from a simplistic standpoint, it makes a lot of sense. Let's make sure that all of the stocks coming through our windows are doing not only average volume, but significantly above average volume, and then look for our pattern. And believe me, you got plenty of candidates coming through windows like this. Then if you happen to be watching Holly, and by the way, if Holly's not doing anything, that's telling you something. She's not only the statistical trading buddy that you've always wanted, but she's also on a day-by-day basis the canary in the coal mine. If Holly's not active on a statistical model, well then that lets us know, okay, you have to temper our expectations, focus on the quality stuff, and even on a day like today, you've got plenty of candidates coming through here.
Well, you've created a lot of interest. People do want to have a copy of these, so I've promised them that you'll drop a copy into the chat window, but there's a good question just here in the moment. Volume. What volume are you looking at, or is it a percentage? How are you defining what you want to see in volume is the question.
That's a very good question. So we can see here, since I'm using market cap as one of the main filters here, I don't even have to put any minimum daily volumes, because what I'm doing here is with these two simple metrics combined, the market cap of 5.4 billion, well, even if we remove this, you'd probably still get liquid stocks, because if you're 5.4 billion company, chances are your stock is not thinly traded.
The market cap speaks for itself. The volume is going to accompany that market cap. So usually we don't use market cap. Usually we're using volume filters. But in this case, Jamie's kind of showing it a different approach, a different angle to try and get to what we're looking for. Bigger, more solid, well-rounded, what's the word I'm looking for?
Liquid stocks.
Liquid stocks. Thank you. Liquid was the word I couldn't find. Thank you. So what he's going to do now, he's going to right-click and he's going to save and share to cloud. So what you all that are asking about on getting the settings for this, I'll highlight your attention to the Go-To Meeting toolbar there, and you should see something that says Chat. You can click the plus button to expand the chat window. And what Jamie will do is he'll basically just configure and drop that code link in there. Once you got the code link, all you need to do is just right-click on it and save link address. What you might want to do, honestly, is maybe even copy them and paste them into a Word document or some sort of a list document, so you have you've got a working copy. Because once we sign off, that chat window will be gone. But
right, and I'll make sure I drop all those links in here in just a moment, because not only do we have these two windows, but we've got one more companion window that I think everybody's going to find very useful here. But to get back to the question, it's not just the market cap that's doing the volume filtering for us, although it's a part of it, but it's really this guy right here. one of my favorite filters, which is the volume in the 1 minute time frame. We've got these from 1 minute, 2 minute, 5 minute, 10, 60. But 1 minute is the smallest time frame. So 100% would be normal volume. So we're requesting 3 times normal 1 minute volume in the prior 1 minute candle, which from experience over the past 9 years tells me most of the time you're not just catching the stock on the one outlier 1 minute period where it had a spike. It's the opposite way around. It's happening all the time pretty much for that stock in that specific day. Okay, so let's wrap this up because I don't want to go too far over the time limit here. We got about 10 more minutes to go here. We still have to let Scott come in and tell you about some specials. But the bottom line is this: if we can make some, realistic assumptions here that the majority, but not all of the stocks coming through these windows are large cap and have a very good chance of being either sold or acquired by the institutions that day, this is a very valuable universe that you should focus on. Okay, and the rest of the market, you could say this is the Zen way that I do it. The rest of the market doesn't exist. These are the high-quality candidates. If I'm a fisherman, I'm standing next to the most well-stocked stream in the mountains. All I have to do is put my pole in there and wait for some hits and pull them in. Now, of course, the chart pattern that you like is going to play a part in this, but don't forget about the simple range breaks. So if we value this information, what I've got right here is a compare count window, which I've imported the green side into the green side here. So both of these strategies reside in the compare count window. So what you want to do once you get these loaded up, market opens up tomorrow, you're going to be able to take account using this window. It's automatically going to populate, and after the first 15 minutes you'll want to take note here. Well, in some of the most actively traded big cap stocks today, after the first 15 minutes you might notice 60% green, 40% red. That's telling you something. That's what we call under the rug information that most people don't even know that that information layer exists, much less are they going to be capitalizing or monitoring it. So this little guy right here can give you a lot of insight. After the first 15 minutes you might see 60-40 one way or the other, but that lets you know in this universe of stocks there's a buying bias going on or a selling bias. And then of course you can duplicate this whenever you want and keep track of the first 15 minutes, the second 15 minutes, see if the trend is increasing, decreasing, staying the same. That's going to help you temper your expectations on how aggressive to be on any of these days here. So without further ado, let me go ahead and get these into the chat window here.
Yep. Those of you, if you don't see the chat window, you might have a go-to meeting little emblem at the bottom of your tray. You can click that to try and enable all windows, but it's a floating window that kind of shows you a couple things: the polling, the chat, handouts. So if you see a little plus button on that floating window, click the plus button and it'll open up the chat window. Now, if anybody doesn't get these, and you sign off too soon before the code is copied and pasted by you, you can always go to info@trade-ideas.com and let them know that you saw these in the webinar and you'd like to get a copy, and we'll do our best to get that out to you. But do your best to try and copy these right now. He just dropped one in there. You can actually click on it. It'll open up a web page. You can just leave that web page open and use the URL at the top or the red code at the bottom, or you could just right-click on those links and then just click copy link address or copy. But you're going to want to put them somewhere so you can have access to them, either a Word doc or some sort of a notepad doc. And then there you go. But for anybody that doesn't make it, info@trade-ideas, we'll do our best to get you a copy of it.
All right, Steve. Anything that I'm leaving out that you can think of, or any other comments? If not, we can bring Scott in, and he can tell everybody about the specials that
Let's
might be
bring
going on.
Scott in. I am noticing we've got a wonderful crowd today. I appreciate everybody showing up. We're looking forward to a great year. But for those of you who are used to the normal week, it's going to be not a normal week. We're having our annual meeting. So in case you missed that, the Tuesdays, Wednesday, and Thursday webinars will not take place this week. And I do believe Barry has closed down the live trading room for the remainder of the week as well. So
Yeah.
we got to meet up and get our goals together and make 2017 a better year than it was for 2016 and bring up a lot of ideas and things that we need to do going forward. So we appreciate your understanding. We're sorry that the content's going to be very light this week, but it's what we do in January. Everything will return back to normal scheduled time the following Monday. 4 webinars and 5 days of live trading room with Barry. And I'll leave it to Scott to kind of tease what we got coming up with our open house in early February, because that's going to be pretty cool.
Yeah, thank you for that, Steve. Yeah, but we're going to come back, especially in February, with a lot of great stuff because we're having our open house in February, so we'll be paying a lot of attention to our visitors between the 6th and the 10th. We're having that open house week. This is an outstanding opportunity, even for those of you on standard trade ideas, to try out what the premium members have access to for a full week. So whether or not you're a subscriber, you can sign up. We do charge about $8 for the open house week, and that's just because we're covering your exchange fees, and we want to make sure that the people signing up for it are serious about trying trade ideas. So you puts a little bit of skin in the game, so you feel obliged to actually try out all the premium features and come to the trading room and come to the webinars that we're offering that week. Really get a feel for it, and it's very low cost. So if you go to trade-ideas.com/open house, it forwards to the landing page. You can just go ahead and sign up and purchase your pass. You'll receive some instructions in your email, and you'll go live on the 6th with the full week of access to all the premium features. And we've done this. This will be our, I think, 5th time or 4th time. We've had outstanding feedback from them. It's been a really great way to onboard clients. So go ahead and try that out. Any questions about that, just shoot us an email. There's also a promotional code for you this week, and you can find that at the code is Holly2Trade. It needs to be all caps, just like that, and that saves you 15% off the first month or year of premium, or 10% off your first month or year of standard. For example, you could sign up for standard with this, get the training, and then participate in the premium open house, for example, and then upgrade to premium once you decide that premium is the way to go. It could be one path to premium. Otherwise, you can just purchase it straight up. So if you go to trade-ideas.com/price and use that code, you can save big. The big difference between standard and premium, of course, is Holly, the AI. But there's other differences too, and those are like the shareable price alerts, our RBI, GBI windows, unlimited backtesting using our event-based backtesting module, the odds maker, all kinds of good stuff. And I put a handout in your handouts panel. If you go to webinar interface right there in front of you, there's a little plus next to where it says handouts. If you expand that, there'd be a link there for you to download a PDF with information about the open house and this slide with information about the promotional code to save you money, and also our contact slide, which gives you information about how to find us. And you can contact us at info@trade-ideas.com. That's the best place to ask technical questions, or reach out to Jamie or Steve directly, J Hodge at Trade Ideas or Steve at Trade Ideas. You can follow Steve on Twitter at TodayTrader. You can follow Jamie at QuantBot. Follow our CEO, Dan Merkin, at Trade Ideas 1. We also have at Trade Ideas, which is the plain vanilla corporate account. And we've got a few others out there, too. If you follow one, you'll see the others. You might even see me out there, too. If you have a billing or subscription question, you can call the 619 number during normal operating hours on the West Coast. But again, just a reminder, if you're asking a question about how to use the software, or any kind of advice questions about the best thing to do for setting up a scan or something, you should email info@trade-ideas.com or reach out to one of us like Steve or Jamie directly. So yeah, thank you all. We'll have a recording of this up tonight or tomorrow morning, and you'll get an email reminder from GoToWebinar with a link to the YouTube playlist where we keep the webinars in your email inbox tomorrow. So thanks everyone for showing up today. Like Steve said, it's a light week for us because we're all meeting together on Wednesday for the company meeting, and a bunch of people are traveling Tuesday and Thursday to assemble in the same location. So we'll be back on our normal schedule next week with our normal Trade of the Week webinars, QA webinar, Trading Studio webinar, in addition to office hours. And the Trading Studio is closed this week after today for Tuesday, Wednesday, Thursday, Friday, and then Barry is back in the trading room, like Steve said, on the 30th. So thank you all. Thank you, Steve. I'll see you on Wednesday. See you on Wednesday, Jamie and Andy. Thanks, guys.
Thanks, everybody.
Sounds
Steve.
good. Thank you.
Have a good one.
See you guys.
Bye-bye.